Welcome to The Explainer. For decades, we've measured a company's success with just one thing, right? The bottom line, financial return. But what if that's only telling half the story? Today, we are digging into a really powerful new model. It argues that the most valuable companies of the future, they won't just make money. They'll be the ones who are best at actually measuring their positive impact on humanity.
All right, so here's our game plan. We're going to start with this new metric for success. Then we'll unpack the human-centered framework that drives it all. From there, we'll see how it actually works in practice, calculate a whole new kind of return, and then we'll wrap up by seeing how this all creates a seriously powerful long-term advantage.
Okay, so first things first, let's really challenge the old way of thinking. For so long, business success has been all about one thing, ROI, return on investment. But what if focusing only on that means we're missing out on some of the biggest opportunities for growth out there?
And this slide, this really gets to the heart of it, the big shift. On one side, you have the traditional metrics, right? Stuff that's good for the company. Gross bookings, market share, revenue. But this new teleological model, it flips the script. It asks, what's good for the community? Are we actually making transportation more affordable? Are we liberating people's time? And let's be clear, this isn't about throwing financial discipline out the window. Not at all. It's about expanding our definition of what value even means.
So you might be asking, how does a big idea like this become an actual, actionable business strategy? Well, you need a framework. And to make this really concrete, we're going to use a fantastic case study, the super ambitious goal of a Tesla Robotaxi network.
So the framework itself is called Teleological Economics. Now that word teleological, it comes from the Greek word telos, which basically means purpose. The whole idea is that a company's success, it should be measured by how well it actually achieves its main purpose, which is to improve human well-being. And here's the kicker. It has to be measurable. You have to be able to prove it with data.
And this is where the theory gets really specific and practical. These teli, the purposes, for something like a robotaxi network, they aren't just fuzzy, feel-good goals. No, they are super concrete, human-centered outcomes. Things like reducing how much people have to spend on transportation every month, giving people back their precious time, making sure everyone has access to essential services. Each one of these is its own pillar of real-world value creation.
And check this out. This isn't just wishful thinking. This is serious business intelligence. The framework connects every single one of those human goals to a real, credible public data set. So, if you want to measure affordability, boom, you use the MIT Living Wage Index. You want to track how much time people are getting back, you look at the American Time Use Survey. All of a sudden, social impact isn't this vague concept anymore. It's traceable, it's verifiable, and it's totally objective.
Okay, enough with the theory. Let's put this model to the test. To really see its power, we're going to apply it to a hypothetical pilot program in Detroit, a city where the transportation challenges are so real, it makes it the perfect proving ground.
Every great business solution starts by finding a real problem to solve. And in Detroit, the problem is a big one. Look at this number. Almost a quarter of an average household's entire income is spent just on transportation. Just think about that for a second. That is a massive financial weight on people's shoulders before they even think about rent or food or anything else.
And just to put that into perspective, look at this chart. That 24%, it's way, way higher than the national average. Now, for a city planner, yeah, that's a huge problem. But for a business strategist, that gap represents something really exciting. It's a clear, quantifiable market opportunity for a solution that can deliver just immense value. And in cold, hard cash, what does that look like? It's almost $1,250 a month, just for transportation. When you see a number like that, a goal like transportation affordability, it stops being some corporate buzzword on a PowerPoint slide, right? It becomes a direct answer to a very real financial pressure that thousands of families are feeling every single day. All right, so the problem is crystal clear. But how in the world do you actually quantify the payoff for solving it? This, to me, is the most innovative part of this whole framework. Calculating the return not on investment, but on alignment with human needs.
Okay, just look at this. The value we're talking about here, it isn't measured in revenue for the company. It's measured in monetized human impact. So giving people their time back, that alone is valued at over $250 million a year. Then you add in the direct savings on transportation, the value of getting better access to jobs, even improved health outcomes, and you land on this single, incredibly powerful number, $448 million in annual value for the community.
And all of this builds up to a new master KPI. We're calling it return on alignment, or ROA for short. You can just think of it as the ROI for corporate purpose. It's simple. You take the total human value you created and you divide it by your total investment. It answers one simple but incredibly powerful question. For every single dollar we invest, how much human good do we actually get out?
And so, here it is, the final calculation for our Detroit pilot program, a projected return on alignment of 9.1%. Now, this is a number a CEO can walk into a boardroom with, a founder can take to investors, and say, look, our capital is generating a quantifiable 9.1% return in positive systemic change. It's a metric that speaks the language of the C-suite and the language of City Hall at the same time.
So, what does this all mean for a business leader? I mean, why go through all this trouble? Because, and this is the key, it's not just about feeling good, it's about building a deep, structural, long-term competitive advantage, a real strategic moat.
This right here, this is basically the operational dashboard. It shows you how to manage this whole process day to day. You track the leading indicators, things you can actually influence right now, like your average wait times. And why do you do that? Because you know that those leading indicators directly predict the lagging indicators that really matter in the long run, like the official government commute time data. This is what turns social impact from a hope into an agile, data-driven operation.
And this is the ultimate payoff, the real strategic moat. When you can actually prove your positive impact with data, you create advantages that your competitors just can't copy. You earn genuine loyalty from your customers. You get regulators on your side, proactively supporting you. And, maybe most importantly, you become a magnet for the absolute best talent out there. Because the best people, they want to do work that truly matters.
So that leaves us with a pretty provocative question to chew on, doesn't it? In this day and age where customers and employees and investors, they're all demanding more than just profits, maybe the ability to actually measure your contribution to human well-being isn't just some nice to have. Maybe, just maybe, it's the single greatest competitive advantage a company can possibly build.